It's exactly 5 p.m. right here in Nairobi on this Tuesday, the 14th of May 2019. It's time for markets today right here on Metropole TV. My name is Nina Shaban, and I'd just like us to start with taking a look at the closing numbers at the closing bell at the NSE today. We start off with taking a look at the indices. We'll start off by taking a look at the NSE 20 share index that went down by 35.95 points to close at 2,695.62 points. The NSE 25 share index went down by 95.47 points to close at 3,554.66 points. And the NSE All Share Index went down by 3.63 points to close at 146.64 points. Moving on, let's take a look at the gainers. Our top gainer today was the Kenya Reinsurers Corporation Limited with a high of 10% or 10 points. Followed by Samia Africa, Samia Africa Limited, that saw a pump up of 9.09. The Unga Group Limited saw an upgrade of 7.14. Barclays New Gold saw an upgrade of 6.48. And the last gainer that we should be looking at this evening is Mumia's Sugar Company Limited, that saw a gain of 6.25. Now moving on to the losers this evening at the close of, at the closing bell at 3 p.m. at the NSE. The top loser is I&M Holdings Limited that lost by 9.93%. WPP Scan Group Limited saw a downgrade of 9.9. Of course, that was bigger than the I&M Holdings, pardon me. No. The I&M Holdings still holds the top losers spot. Express Limited, so a downgrade of 9.73. Flame Tree Group Holdings Limited, so a downgrade of 8.87. And Ever Ready East Africa Limited, so a downgrade of 6%. Now quickly looking at the movers. Movers has been taken over by 4 financial services. This are companies in the financial sector. There's Cooperative Bank of Kenya Limited, traded shares worth 549,600. The Kenya Commercial Bank Limited, traded shares worth 697,900. Barclays Bank Limited, traded shares worth 6,728,100. Equity Group Holdings Limited, traded shares worth 7,925,300. And of course, but this is a company that is always seen making moves, a telecommunications company amongst the 4 financial institution companies. Safaricom Limited, traded shares worth 8,458,600 shares. All right, now I'd like us to take a look at the daily commodities, and we shall be back with news. All right, now let's take a look at the news that is making headlines in the world of stocks and business at large. Fuel prices have risen for the second consecutive month, according to a press release by the Energy and Petroleum Regulatory Authority. The price of super petrol has gone up by 5 shillings and 43 cents a litre. The price of diesel has risen by 2 shillings and 24 cents per litre, while that of a litre of kerosene has increased by 2 shillings and 40 cents. The price increases are inclusive of 8% value-added tax on petroleum products. Now moving on swiftly, a report by one of the local dailies, the Daily Nation, has indicated that radical plants, including a possible shift to genetically modified organisms, a technology have been laid out to revive Kenya's agricultural sector. One of the key proposals in the plan is the establishment of 50 new large-scale farms of 2,500 acres or more in a plan aimed at unlocking up to 500 acres of new farm production. Now, the plan will see 150,000 acres under sustainable irrigation, and the farms will benefit from government infrastructure such as roads and irrigation systems and power. Another key plan is to carve up the country into 40 zones where 1 million farmers, pastoralists and fishermen in 34 counties will be served by 1,000 farmer-facing SMEs that provide input and equipment, including for irrigation, processing and post-harvest aggregation. Under this program, an additional 40,000 acres will be brought under irrigation in these zones. To support the program will be 200 national and county transformation leaders, as well as 3,000 youth who will be hired as extension workers delivering research and data-driven services in a bid to improve the ratio of extension worker to farms to the ratio 1:600. In a move that signals a departure from grand projects such as Galanak Kulalu, which have gobbled up billions of shillings with nothing to show for it, the government now favors the smaller privately run projects. The government's policy shift comes against the backdrop of a rebuke by the World Bank in its latest economic update that the country lacks the commitment to reform the sector that has created employment for more than half of the population. Now, the fuel cost levy in May electricity bills has jumped by the biggest margin in 5 years on reduced use of cheaper hydropower following poor rains. The dry weather forced Kenya to generate more electricity using diesel, setting the stage for a rise in electricity prices through the monthly adjusted fuel surcharge levy. Energy and Petroleum Regulatory Authority (EPRA) data shows that fuel levy, which is influenced by the share of electricity from diesel generations, rose to 3 shillings and 75 cents per kilowatt hour, that's kWh, and up from 2 shillings and 75 cents last month. The 3 shillings and 75 cents charge took effect on Friday for prepaid consumers, with postpaid users set to feel the pain from next month. The additional charges, which will be the highest rise since May 2014, when the fuel levy rose by 2 shillings and 3 cents. Now, the drought cut generation hydropower by 39 cents or 163 million kilowatt hours between August and February, EPRA data shows. This has wiped out the benefits of the additional 151 million kilowatts of wind and solar power that was injected in the same period. EPRA is yet to release April data, which looks set to be worse compared to February on the delayed rains. The government had promised cheaper electricity from increased use of the two green sources, Lake Turkana and Garissa solar plant, by reducing costly thermal power and ultimately cutting the fuel cost adjustment levy in bills. At 3 shillings and 75 cents, homes and businesses will pay an additional 930 million shillings in fuel cost charges based on the average monthly consumption. Now, looking at matters tax evasion, 38 Kenya Revenue Authority carrier employees have been arrested on Friday on suspicion of abetting tax evasion and bribery will remain in police custody for 14 more days. Senior resident magistrate Paul Mayova on Monday issued the custody order amid protests from defense lawyers. The Directorate of Criminal Investigations, the CI, had asked the court to have the suspects detained for 21 days, saying detectives need more time to retrieve data from 178 seized phones and laptops as well as M-Pesa statements for forensic examination. Now, the DCI also argued that 48 more KRA staff were on the run and that they could interfere with investigations. The staff who work in the Domestic Tax Department and Customs and Border Control are accused of helping and fraudulently clear cargo and alter tax returns to help people dodge tax payments. The agency did not say how much revenue had been lost. The detentions come as the government struggles to raise tax revenues to fund its budget. The state was short of its revenue target by 97.7 billion Kenyan shillings in the 9 months to March. Lawyer Julie Soweto suggested that the suspects be held in a hotel since there was a higher likelihood that only a few of them would later be charged. Kerry on Friday said 75 workers had been interdicted for abetting tax evasion after being under covert watch for 4 months involving trailing their money and communication, commonly referred to as wiretapping. Now, tea prices at the Mombasa auction have hit a 10-month high after months of poor performance as volumes declined by 2.3 million kilos. Now, data from the East African Tea Traders Association indicate a kilo fetched 235 shillings last week against 225 shillings in the previous sale, marking the highest price recorded this year. The price kicked off at 215 shillings a kilo in the first sale of 2019 before taking a downward trend to touch a 4-year low of 193 shillings early last month. However, prices have been rebounding in the last 3 sales as volumes declined. The volumes have been coming down as the drought that ravaged the country in the first quarter cut supply of green leaf to factories. In March, over 40,000 employees working in tea factories were forced to go on advance leave as production dropped by half. Kenya Tea Growers Association said harsh weather conditions have forced factories to operate 3 to 4 days a week. The Tea Directorate had forecast that the volumes will this year drop to 416 million kilos from a high of 474 million kilos last year. The decline, said the Directorate, will see the average auction price surge to 280 shillings a kilo, up from 260 shillings in 2018. All right, now, the Capital Markets Authority, CMA, has granted license to SCFM Limited to operate as a non-dealer online foreign exchange broker, making it the second firm to attain this status. SCFM is a wholly owned subsidiary of Cyprus-registered SM Capital Markets, which also has another subsidiary, Scope Markets, registered in Belize. The firm will join EGM Securities, licensed last year, in linking clients with online foreign exchange markets at the Commission. This does not extend the two companies buying and selling foreign currencies. SM Capital Markets has given a capital injection to SCFM to cover the paid-up capital, according to the CMA. It comes at a time the regulator has increasingly warning the public of the risk of losing investment get by trading via online foreign exchange brokers or money managers that have no CMA accreditation. Non-dealing online forex brokers offer a trading platform with access to global markets that allows clients to trade easily in any currency using electronic devices. Clients deposit investment amounts in an account offered by the broker and execute trades by themselves. Traders need in the upwards of $100, which is about 10,100 shillings, to start trading in global currencies via platforms such as that of EGM, with payments made through digital financial services. Forex trading is based on speculation of one currency price against another and is governed by CMA's online foreign exchange trading regulations of 2017. Now, higher operating expenses pulled down Crown Paints' net profit in the year ended December 31st, 2018 by 17.68% to 183.8 million shillings compared to 223.2 million shillings the year before. Now, the firm's revenues jumped 13.12% to 8.3 billion shillings in the period from 7.35 billion shillings a year earlier. Now, the paint makers say difficult market conditions in all the subsidiaries in Tanzania, Uganda and Rwanda, and especially Tanzania, slowed down its margins despite improvement in the Kenyan market, which had triggered high demand for its products locally. Despite the reduced profitability, Crown has proposed a dividend payout of 0.60 cents per share, maintaining the same level as last year. This will see it pay out a total of 42.7 billion shillings for the period. The paint manufacturer is in the list of over 10 listed companies that have announced profit warnings for 2018 results, showing profit drops of 25% or more. Right, well, that's it for the news today. Let's take a very quick break. I need to move over to the other side where my very able panelists is seated just to go through the stories that have been making headlines today. After the break.